Hello everyone, welcome to the market opening bell on Thursday, March 20. The market is awaiting the Federal Reserve's interest rate decision and Tencent's earnings, leading to narrow fluctuations in Hong Kong stocks on Wednesday. The Hang Seng Index opened 42 points lower, briefly dropping 138 points to a low of 24,601 before recovering. It later rose 133 points to a high of 24,874, marking a more than 3-year peak. The index closed up 30 points or 0.1% at 24,771, extending its winning streak to 4 days with a cumulative gain of 1,308 points or 5.6%. The X-share index fell 14 points or 0.2% to 9,163, while the Hang Seng Tech index dropped 64 points or 1.1% to 6,041. Total market turnover for today was 271.859 billion Hong Kong dollars. In mainland China, the Shanghai and Shenzhen markets saw volatile pullbacks, with the Shanghai Composite Index closing at 3,426, down 3 points or 0.1%, and the Shenzhen Component Index closing at 10,979, down 35 points or 0.3%. Combined turnover in Shanghai and Shenzhen was 1.4663 trillion yuan, a decrease of 53.3 billion yuan from the previous day. The renminbi midpoint rate was set at 71.697 against the US dollar, up 36 pips from the previous day. Tencent released its Q4 2024 earnings, benefiting from an AI-enhanced advertising platform upgrade, increased user engagement on WeChat channels, and growth in evergreen games. Q4 revenue reached 172.4 billion yuan, up 11% year-on-year and 3% quarter-on-quarter, slightly below our expectation of 174 billion yuan. Profit attributable to shareholders was 51.324 billion yuan, up 90% year-on-year, but down 4% quarter-on-quarter, surpassing our forecast of 45 billion yuan. Adjusted profit attributable to shareholders was 55.312 billion yuan, up 30% year-on-year, but down 7% quarter-on-quarter. By segment, value-added services revenue rose 14% year-on-year to 79.022 billion yuan. International games revenue increased 15% year-on-year to 16 billion yuan. Domestic games revenue grew 23% year-on-year to 33.2 billion yuan, driven by a low base effect, higher revenue from key titles like Honor of Kings, Peacekeeper, Elite, and Valorant, and contributions from recently launched games such as Dungeon and Fighter, Origin, and Delta Force. Tencent noted that its evergreen game portfolio expanded from 12 titles in 2023 to 14 in 2024, while fostering new games with long-term potential. Marketing services revenue rose 17% year-on-year to 35 billion yuan, fueled by strong advertiser demand for WeChat channels, mini program, and WeChat search and ad inventory, alongside upgrades to its AI-driven ad tech platform, boosting click-through rates and ad spending. Fintech and enterprise services revenue grew 3% year-on-year to 56.1 billion yuan. For the full year, revenue increased 8% to 660.2 billion yuan, and net profit surged 68% to 194 billion yuan, and adjusted net profit rose 41% to 222.7 billion yuan. Tencent proposed a 32% increase in its annual dividend to 4.5 Hong Kong dollars per share, totaling 41 billion Hong Kong dollar, up from 32 billion Hong Kong dollar, and plans to repurchase at least 80 billion Hong Kong dollars in shares, down from 112 billion Hong Kong dollars in 2024. XPeng Motors saw its share price fall 5.9% to 89.55 Hong Kong dollars after its earnings release. Let's dive into XPeng's results. Q4 2024 revenue was 16.1 billion yuan, up 23% year-on-year, with a net loss attributable to shareholders of 1.33 billion yuan, narrowed by about 1% year-on-year. Adjusted net loss for the quarter shrank 21% year-on-year to 1.39 billion yuan. No final dividend was declared. XPeng's Vice Chairman and Co-President Brian Gu noted that the vehicle gross margin improved to 10% in Q4, marking 6 consecutive quarters of progress, with expectations to stabilize at the mid-double-digit level. While operational metrics improved, the core issue remains net losses, and management did not specify a path to profitability. XPeng provided guidance for Q1 2025, projecting vehicle deliveries of 91,000 to 93,000 units, up 317% to 326% year-on-year, and total revenue of 15 billion to 15.7 billion yuan, up 129% to 140% year-on-year. In the first 2 months of 2025, XPeng delivered 60,803 vehicles, implying a March delivery target of around 30,000 units. In the earnings call, XPeng's founder and chairman, He Xiaopeng, announced plans to launch L3 level autonomous driving software in China in first half 2025, with mass production of L4 level low-speed unmanned driving vehicles targeted for 2026. He added that the self-developed Turing chip will enter mass production this year, with applications extending beyond cars to flying cars and humanoid robots. He Xiaopeng outlined three growth curves: AI plus automotive global market expansion and deep integration of humanoid robots with the automotive industry. Companies reporting earnings today include China Mobile, CK Hutchison, Cheung Kong Property, Henderson Land, Geely Automobile, AAC Technologies, and CSPC Pharmaceutical. The Federal Reserve, as expected, announced the interest rates would remain unchanged, while lowering its economic growth forecast for this year from 2.1% to 1.7%. On the other hand, it raised its inflation outlook, with the median core PCE inflation expectation increasing to 2.8%, up from 2.5% projected last December. Fed Chair Jerome Powell stated that the revision to the inflation forecast was largely related to tariffs, but expected the impact to be temporary. He also noted that survey data indicated a significant rise in economic uncertainty and downside risk, though he believed the probability of a recession remained quite low. The dot plot showed that Fed officials still expect a half percentage point rate cut this year, providing relief to market participants. Bond markets rose, with the yield on the US 2-year Treasury, sensitive to short-term interest rates, falling below 4%. The Dow Jones Industrial Average surged as much as 597 points, closing up 383 points, or 0.9% at 41,964. The Nasdaq closed at 17,750, up 246 points or 1.4%, while the S&P 500 ended at 5,675, gaining 60 points or 1.1%. The Nasdaq Golden Dragon Index, reflecting Chinese stocks, fell 0.44% by the close, with Alibaba up 0.32%. The Hang Seng Index Night Futures closed at 24,719, down 15 points, 52 points below the HSI's daytime close. After days of sharp declines, Tesla rebounded 4.7%, Alphabet rose 2%, Amazon gained 1.4%, Apple increased 1.2%, and Microsoft climbed 1.1%. Nvidia rose 1.8%, with the company announcing at the GTC 2025 conference that it has sold over 3 million Blackwell AI GPUs this year and unveiling its future chip roadmap, including the Blackwell Ultra, Vera Rubin, and Feynman series. It also introduced Dynamo, which accelerates AI inference processes, and the GR00T N1 foundational model for humanoid robots, signaling its continued expansion in AI hardware and software. Nvidia CEO Jensen Huang predicted that AI computing demand would surge 100-fold, with data center capital expenditures expected to exceed $1 trillion by 2028. He questioned Broadcom's competitive position in the AI chip market, emphasizing Nvidia's extensive experience in designing AI training chips and suggesting that Broadcom's future products may struggle to compete. Our stock pick today is Ocumension Therapeutics, stock code 1477. Ocumension Therapeutics is an ophthalmic pharmaceutical platform company focused on identifying, developing, and commercializing first-in-class or best-in-class eye care therapies. Its core products include YUTIQ, Ocusut, Imodin, and Cedra. Notably, YUTIQ was added to the latest national reimbursement drug list published by the National Healthcare Security Administration in December 2023. Approved for treating uveitis, YUTIQ has significantly reduced the financial burden on patients, leading to strong demand and rapid sales growth. This success has also driven stable growth in other products, expanding the company's market share. The group has actively expanded its hospital network, achieving coverage of 10,970 hospitals nationwide, including 1,652 Grade 3 hospitals, supported by a commercial team of over 250 members. While accelerating product adoption in hospitals, Ocumension has also tapped into the commercial potential of mature products like Ocusut and Cedra, and conducted academic promotion for new products, resulting in rapid revenue growth. For the first half of 2024, ending June 30, the group's commercialized products generated total revenue of 167 million yuan, a substantial 61.6% increase from the same period in 2023. This growth was fueled by significant revenue gains from ophthalmic products including YUTIQ, Cedra, and related offerings, and a sharp rise in income from contract development and manufacturing services. The adjusted net loss for the period was 100 million yuan, down 25.1 million yuan from 125 million yuan in first half 2023, primarily due to increased revenue and gross profit from ophthalmic product sales. According to the latest operational data, full-year revenue for 2024, ending December 31st, is projected to range between 408 million yuan and 420 million yuan, reflecting a year-on-year growth of 65.5% to 70.5%. This increase is largely attributed to the group's acquisition of products from Alcon and the licensing of authorized products, which significantly boosted revenue scale, alongside substantial growth in sales of other ophthalmic drugs. The introduction of these acquired and licensed products has not only enriched the group's portfolio, but also delivered considerable economic benefits, particularly from dry eye-related products like Siren, further strengthening its competitive edge in the dry eye disease market. In terms of its product pipeline, Ocumension holds 25 drug assets targeting both anterior and posterior eye conditions, establishing a comprehensive ophthalmic drug portfolio. This includes 3 products in phase 3 clinical trials and 3 innovative drugs in the registration stage, covering all major anterior and posterior eye diseases. Suggested buy price 5.05 Hong Kong dollars. Target price $5.6. Stop loss $4.8. I do not personally hold the aforementioned stock.